Hello, traders everywhere from the world. This is Gil, and I'm here with Stan at XM Live in the advanced room. And we welcome also those who are watching us from social media. XM Live is a service where we stream on 3 different channels, 8 hours every single day. You have an advanced room, you have a beginning room. And this is the place where you can watch experts, how they're trading, what mistakes they do, what trades they do. You can see everything, how they calculate their risks. And you're welcome to join us every single day. It's free. So, Stan, how are you doing?
Absolutely, Gil. Thank you very much for asking. Everything is great. It's been pretty dynamic week with actually even since the Fed meeting, since the start of the last week. Very optimistic on the market, and I have been waiting for that session to see your opinion and your output on it and how exactly you see things. You have been and always are into macro fundamentals. So looking forward to
Hmm.
your opinion. How about you? How is your weekend? How was the week so far?
Look, trading wise, I must say so. I made a couple of losing trades this week, but I have a big winner, and that's Bitcoin. So I'm happy about this. This is the biggest winner. And so I think I'm a little bit in plus even in the week, even though I made many other mistakes. What can I say?
How you buy so high?
Look, I bought,
Because
now I'm in
you know for
plus, right?
most for most traders this will be impossible entry. Because most traders will say, oh, it is too high right now. Even I would rather sell, or I wait for a pullback to enter again. How you anticipate a trade that on an instrument that's already 100% plus year to date? Um, yeah, that's
First and foremost, Bitcoin on average does 300% per year. So
right. Yeah. Okay. All right. That
we are talking
that
here about
explains a lot.
Bitcoin, not about euro dollar.
Right.
So doesn't matter. I think Bitcoin and cryptocurrencies in general is all about momentum, and the momentum is here. So we have momentum. And that's the first point. The second point is we have momentum, and here you see here at the top, there is no correction, nothing. This is very bullish. Like we get this very bullish move. I'm watching here in the daily chart. So very bullish move and no correction. This is so bullish. I mean, this is a weekly chart. We broke above the highs here. There is no correction. When I realized that, it must go higher. And again, there is no fundamentals behind it here. I would say the only fundamentals that I consider, and this is also why I'm long in gold, is that I believe that the Fed stopped hiking. So we are in a new period. I think we have now the time, the opportunity to go into quite long-term trades. There is possibility for long-term trades, changing trends that are starting now because we were in a tightening monetary policy. And I think we will go now, we fade out of the tightening policy and we will go into an easing policy next year. And that creates new trends, a lot of changes. Again, normally changes are very hard to trade, and this is probably why I made a lot of other trades that went into minus. Um, but it's enough to have like 1, 2 winners, and that's what you need.
Yeah, mostly with swing trading. I mean, you're obviously entering a position for way bigger reward rather than the risk that you're exposing yourself with. So,
Yes.
y- you know, we have discussed it before several times. Just 1, 2 very good runs with a couple of multiple entries, and the year could be fantastic.
Absolutely. Absolutely. So at the moment, I'm very happy here to be in this trade. By the way, I was scared also yesterday. I see gold is falling. I see things are not going my way, but stick to the trade sometimes. I feel often trading ideas don't have to be complicated. But as soon as you're in, the market tries to trick you out, and you have to stay stubborn and in the trade, and then you sometimes you get rewarded.
So would you say that position management is harder than entering in a trade?
Much harder, much
I
harder.
can relate. I can relate. Except it is particular trading system that is automated and or it is just quickly hit and run when you have um, fixed stop loss and take profit. In that case, probably will be way easier because you have, you don't have the mental talk all the time and personal talk. Should I stay in or will this look like a reversal? How about the upcoming event, etc., etc. So yeah,
Yes.
Akram in the building. Hello, Akram. Thank you so much for tuning in. Welcome on board. What do you think about gold and dollar Japanese yen? Thank you, sir. And regarding the Fed meeting, I think um, it was pretty dovish meeting.
Yes, that's what I'm
They're
saying.
very data driven, They and the probability for a rate hike, one more, it is close to zero.
I think so too. I
Yeah.
think so too. So the major question will be why is so by the way, if you look at the FedWatch tool, I think I don't know if I have it open. Let's see here. Um, the FedWatch tool I have here. So and maybe I have to restart. This was the numbers from yesterday. So let's get the new ones. That, so we see there is a 9% chance, a 10% chance that interest rates go once more up in December. I think this is not happening. So that's, by the way, also bearish for US dollar, and it's good for the stock market. But when we look already in December 24, we can see that the market is pricing in around 1% lower interest rates
Right.
in a year from now.
That's right.
So, by the way, I'm afraid. I'm afraid that if this happens, the question will be why it happens. If it happens because inflation normalized, then it's very good. If it happens because we get a financial stress situation, then it's very, very bad.
I think the second option. uh, I've been
Maybe both, right?
backing it. Actually, one will lead obviously to another one,
Yes, yes.
except this stress is energy related. It's gonna be the most horrible thing when you have high inflation at the same time recession.
Hmm.
This will be probably the worst scenario, but it's a probable one. Um, as well. So I think Fed will cut rates next year at some point for the reason of financial distress, as you named it.
The question is what the market is pricing in, right? Is the market pricing in 1% lower because of inflation normalizes? That could be at the moment good for the market.
But the market is very optimistic. I mean, if we look at
That's what
the,
I'm saying. That's very bullish for the market at the moment.
I mean, what a rapid false breakout and V-shaped recovery on the indices.
Yes. So I think the market is pricing in that inflation normalizes and everything will be fine. By the way, we have the Fed who is pricing in 0% chance of a recession.
Right. And
But
actually, market believes that because we had a horrible data on the non-farm payrolls, 150,000 something that we didn't get since 2021 January, and the market considered that good news.
it's unbelievable, no?
It is. I say it is because, yeah, it's one data. It is going to lower employment, usually going to lead to lower consumer spending, which is going to lead to inflation going down, which is the target of Fed, which is the target of um, the market participant. And but if it happens to be a tendency with the lower data, then we're gonna see maybe market realizing it's different. So I was surprised on Friday. I was like, okay, 150. Now they're gonna sell dollars and buy equities, and they going to flip the pancake after the U.S. session opens. But it didn't
Mhm.
happen. The
Yeah,
market
not
just
yet.
yeah.
I think it will happen. By the way, here, this is an interesting chart. It shows the probability of a recession. So here is I mean, for me, absolute crazy thing. And I mean, this shows the ignorance of the Fed, I would say. They are pricing in 0% chance of a recession. Isn't that? Wait, I have to. 0% chance. Unbelievable. The Fed,
And
no member believes there will be a recession.
I think that's part of being a politician to some extent. Um,
But they are not politicians.
but they are playing as ones
They
in
are
order for them to keep.
academics.
Yes, but in order for them to keep the credibility, they have to play politicians, and I think this is the right approach for them. Um, I mean, if they if they come up with data that we have high probability of recession, then it means that the job that they are doing is not very well being done.
No,
So,
actually not. They say their goal is a soft landing. They say they want to have unemployment go up to 6% because then inflation would go back to normal. That's their job. Their job is to bring a smaller recession with 6% unemployment rate.
right.
So they would do the perfect job.
But
So
for them, this is not a recession. Like two consecutive quarters of decline on the GDP also was not. So, I think that it is their mandate to keep credibility this way. I think that, for the market participants, this is what they have to do. Because
I
think,
don't think. I think they have to do. Look, the Goldman Sachs and Bank of America, they're also pricing in a very low probability of a recession. And for them, it's marketing. Okay. But I think the Fed, they are bureaucrats. They say they're data dependent. And we saw also in 2021 how big their mistake was about transitory, and it costed unbelievable a lot the markets their mistake because now they had to raise much stronger because they started too late, and it's a mistake. They shouldn't do mistakes. They should do their job is best done if they're accurate. They are not politicians. That's the beautiful thing. They shouldn't be, but their track record in forecasting is very bad.
and they are playing politicians at the end of the day.
Yeah, but they shouldn't. Like they're not.
I agree
You
with
know,
you.
they're not. They're not politicians. They're not elected. They don't. They have a mandate and they have to fill their mandate. This
I
is
agree with you.
why they are not politicians.
I agree. I
This is
agree with
why.
you.
So that's an interesting chart. But Akram was asking about US dollar, Japanese yen, and gold. And yeah, we can go there back. By the
And we have
way, the
Stefan.
job
Hello,
report,
Stefan.
just to show here the numbers, where is it here? So we see clearly that non-farm payroll now really beautiful come down. So they're on the right track actually. Job report comes down, unemployment goes slowly up. That's exactly what they should do, but it's extraordinary for me because again, when we look at when we look what CEOs believe the probability. CEOs of companies believe there is an 84% probability that we go to a recession. The yield curve is showing us a 61% probability for recession, and consumers believe a 69% probability of a recession. So recession is likely to come. I think so.
I also think.
Okay, let's go to US dollar Japanese yen. What's your thought here?
Let me open it.
This is daily chart.
Wow, that's still bullish. Also, on my daily system of indicators, still above it. Didn't have any sell signal.